I think the main question the entire world really wanted to know is, how's my portfolio doing? How's the Sensei's portfolio doing? And well, needless to say, I'm going to show you it today. Show you some additions I've made, and I will also show you, give you an idea on what I plan on picking up, if anything, what interests me in my portfolio right now, everything, but what stocks do I plan on adding to? I'll let you know what I am most likely to add to and what I think is, most likely I'll be okay with holding on to it. We have a few, so as you see, portfolio value right now, 12,700 pretty much. In the past month, I am down 16.9, 17%. They just flipped it over on me, 17%. 3 months out, 3 months out, down 24%. A year out, down 14%. Okay, all time, I'm down 4%. That's right, and this is since July 28th of 2017. So I've been trading now for a solid 2.5 years. So since then, all time now I'm down, which is something you hate to see. And again, you see the Dow's at levels where it was from 2017. So what a shocker. I'm not too surprised that I'm down. So all things considered, this is a great time to buy stock, and that is what I'm interested in. So let's look at this portfolio and see what changed. First, we have our lovely Apple Papple. Everyone loves some Apple Papple. Still the same here. Dollar cost average of 168.08. Still 5 shares, around 10% of the portfolio. Still have a total return on this guy of over 50%, or over 50%. Sorry, a little bit under 50%. So Apple at this level is one that I think I would be willing. I'm interested in. I don't think it's a top priority buy for me personally. I think if it gets down to back around the 230 range, which again, you say, and they're like, oh yeah, it was under 214 prior, so maybe you should have bought then, you dummy. It was okay. Let me just tell you, I understand I missed it. We could get back to those levels again. I just wanted to let you know. So I still like it. I would have liked it a lot more if I would have picked it up under 230, but there were so many stocks I was throwing money at. I didn't know what to do. I just didn't know what to do. I didn't even know what to do, dude. They made it difficult on me. So you've got Apple, a lovely, lovely, lovely thing there. We have what I would consider a pretty high priority for me in terms of what I want to buy, and that's Disney. Disney is a stock that you see over the past month here hit lows of right around the $80 range, which was a steal for this company. Anything under 100, in my opinion, is still a steal for this company. And the reason it's been so hard hit would be because of the fact that pretty much a vast majority of their revenue source is completely gone right now. They're really relying just on streaming now to get that revenue source. So the stock is really at a standstill point in terms of revenue for the next quarter or two. So investors were selling out of it. Now they're buying back in. I think overall Disney's a fantastic pickup. I would love to pick it up, pick up some more of these shares. But I have on my other portfolio, I hate to say it, my M1 Finance portfolio, which we can go through as well if you would like to see it. But for now, we're just talking about Facebook and my Robinhood portfolio. So here's Facebook here. Dollar cost average of 165.29. So overall, I'm down 5.5% on this. Hate to see it. Hate to be down on a position like this. It's a position I really like. 9 shares at 165.29. Around 11% of the portfolio. So those are numbers you like to see. Facebook's one that I think is a pretty good priority buy right now. I think the valuation is extremely cheap on it. I think they're only actually going to benefit from this actually as a whole. I think they're really going to benefit as a company because of this, not only just from users, but also an increase. Obviously, we're having lower ad rates, but I think Facebook's really going to benefit from this, just from more screen time for people, a significant amount of more screen time for people who have, been locked indoors. Microsoft, that's right. I have a dollar cost average of 87.12, $87.12. So I have a total return on this guy of 72.5%. So overall, I'm still very happy with this position, and I'm not too upset. I do think the stock's very much worth a buy. I think it's a very, very good value for a company it's a very good company. What can I say? Um, the valuation here is cheap. I like it. It's not my top priority to buy, though, but I want to add to the position. If I could buy in fractional shares, which I do on M1, by the way, then I would. Next is a newer position you haven't seen before, potentially, which would be Cloudera. I bought into Cloudera recently, so I've got now 15 shares at $7.90. Not a huge position, less than 1% of my portfolio. It's one I've wanted to buy for quite a while, and I've had a recent dip here that I was like, you know what, I like it. $7.70. Bought it around the start of March here. I was excited for this, and then obviously it went down further, and I was like, oh my gosh, what did I do? But that's okay. Overall, I believe in the long-term vision of this company. As far as adding shares, if I were to add shares, I'd probably just add 5 more at below dollar cost average right now. If I could buy it below average, I would certainly consider it. It's one that I believe very well in the long term about. So we have AbbVie next. Dollar cost average of 71.55, so I'm up 2% on this position. 4 shares, around 2.3% of the portfolio. Definitely one I want to add to my position of, but I want it to be below dollar cost average. And again, you bring up, well, why didn't you buy it at 62? Well, guess what? Sorry, guys, I was buying other things. So, one I would like to add on to. Gilead Sciences is a major one that, again, I also want to add to this freaking position too. 3 shares at $70.33, up 5% on the position. 1.75 for the portfolio. Nothing crazy with Gillette. I want to add this for many reasons. Obviously, there could be a fantastic and huge player in this outbreak going on right now. So that stock only seeks to benefit, but they also pay a nice dividend. So I want to buy some more Gillette. I just, again, want to do it a little bit below my dollar cost average if I can. Ford, you might see, you might hate me for it, and you might think I'm an idiot, but if you do, that's fine. I picked up 5 more shares of Ford recently at lows around $4.50. I was planning on buying more, but I wanted to spread the wealth on some things, so I bought more of other shares too. So overall, I'm down 48% on this stock. You hate to see it. 60 shares, 2.4% of the portfolio. You hate to see it. Stock's just been a dog for me, and this has only made it worse. I don't really know if I plan on adding more Ford shares at the moment. If it gets back to below $5, I certainly will consider it. I think I like the stock below 5. Around the 450 range is fantastic. Next, we have New York Community Bank, which has been pretty hammered because of this crisis as well. Shares 20 shares at $11.50, down 15% on this. It turned to 15 right as I said it, so I kind of control the stock market. So just in case you were curious, so. I'm not too interested in buying New York Community Bank in my M1 portfolio. I have a lot more finance stocks, so this one's not essential for me. It's one I've just had for really the life of the portfolio, so it's kind of a nostalgia thing, and I like them quite a bit. Next up is a stock I would consider a high priority buy in my opinion. Would be Target. Dollar cost average for me is $70.09. I've got 4 shares of this bad boy. Total return of 33%. Last time I bought this was January 16th. I bought a share at 116 because it went down a little bit, but we win some, we lose some. Rose my dollar cost average quite a bit actually, but that's okay. Still good value, and this stock still, it's a big winner for me. And I'd like to add more. If it gets even cheaper, I would like to see it, but really retail's been doing super, super well through this. We're talking about now it's hitting its lows for this little stride here. So overall, the stock's doing super well. So if it came down to it and it fell down to the 85 range, I think I'd buy pretty heavy into it. I like Target quite a bit. Very well run company. Next we have Kohl's. That's right, guys. I picked up, as you can see here, on February 19th, I picked up 2 shares at, don't talk to me, 2 shares at 43, 61, okay, then I bought 1 share at 14.50, 14, 15. That's you don't talk to me about that one. The timing is never right. I bought in at the 40 range because it was going down, and I was like, oh, it's coming back, and then the crisis hit. I think this is a very good buy in my opinion. I really like the prospects of this company. I have more shares in my M1 portfolio than I do here. Only 5 shares here. Down 54%, around 0.68% of my portfolio. Yeah, nothing too crazy about Kohl's. I think it's pretty high on my list of stocks I would like to purchase, and I purchased 1 share, so nothing too exciting. But I was putting money elsewhere. Tapestry brand. You might notice I added to my position. Dollar cost average now at 19.54, down 30% on the position. I picked up 5 shares here, or 2 shares on February 24th at 25.95. Yeah, okay, I get it. I flubbed it. I really messed this one up. I did it wrong again, but then I bought 3 more shares at 13.13 on March 16th. So, really like Tapestry. Very nice dividend. The company's got a good balance sheet. So, it's one that, frankly, if it goes to the $13, right at $13, I'll buy probably 5 more shares. If it stays where it's at, stays around 14, I could definitely see myself picking up another 5 shares regardless, but I'd like for it to go to 13. Good stock in my opinion. Next is again another new position, Stitch Fix, one that I bought 8 shares at 15.36, down 12% on this. I actually originally bought 7 shares at 15.85. Then I bought 1 share at 11.93. Should have bought some more at that 11.93, no doubt. But I don't know. I think this is a stock that suits to benefit from this as well. But I'm not too upset with this. I'm happy with this new position. I think it'll bode well for me in the future. So nothing crazy. I might consider adding more if it's pretty significantly below my cost basis. So if I get Stitch Fix around the $13 range and below, I'm in. Home Depot, still the same deal. $158.50 per share, as in the 1 share I own. Up 18% still on Home Depot. So I like to see that. Good gains for Home Depot still through all this. After Home Depot, we have Coca-Cola. No new additions to Coca-Cola. 45.24 is the dollar cost average. 5 shares. Total return right now, right below 4.5%. Nothing too crazy with that position as well. It's Coca-Cola. What do you want me to say? Consumer staple stock. I can consider adding into it. I don't know if I will, but it's really a recession-proof type stock. People always be buying their soda pops. So if we go into recession-type environments, I'd like to have Coca-Cola more in the portfolio. I'll take a look and see what's plausible. Next, we have Starbucks. I've got 2 shares at 52.50, or 52.25, I should say. Up 30% on this position nearly. One that I like the valuation of right now. I'm not personally going to buy into it, in my opinion, at the moment, but I do like the valuation. I'd like to have a larger position, but I don't see myself buying into it quite yet. Next, we have, that's right, iRobot. We've got a solid 8 shares at 46.91, down 9% total. This is a stock that's fared pretty well through this. Nothing too bad, down 8% in the last month, 17% in the last 3 months. So overall, outperforming my portfolio, all things considered. So iRobot doing a good job, staying consistent like I really wanted it to. So we just waiting for it to take off in the future. Not one I'm necessarily going to be buying quite yet. Next, we have a solid MU position I'm a huge fan of. Cost basis of 45.19, 10 shares in the play here, down 4.6% on this position. Not one I'm necessarily interested in buying quite yet. So nothing too exciting going on. I think it'll perform well in the long term, but it's not one I'm targeting to buy. Following that, we have Cisco. Cost basis for me is 36.94, 3 shares. Total return of 5%. Nothing crazy as far as additions here. We're still rocking the same amount of shares for Cisco that I've been rocking for quite a while. Next is Garmin, still sitting there. Cost basis at 79.74. Down 10% for me. It's a 9.5% really. So Nothing you like to see there. It's not the end of the world though, but might be considering picking up a little bit of that Garmin, but I don't think I am. I think I'm content with just the one share. Next is ADI, Analog Devices. Cost basis of 79.05, so I'm at 15% on this position still. Just one share though, so not one I'm necessarily planning on buying. After ADI, we have, that's right, everyone's favorite, HPQ. Oh, HP. How's HP doing? 5 shares at 19.07. Didn't pick up any more shares, down 12% in this position. Not one I'm necessarily interested in buying quite yet because the prospects are there. I just think I have better places to put my money at the moment, in my opinion. After HP, we have Activision Blizzard. One that has really performed, I would say, well during this. In the past 3 months, only down 4.2%. The past month, actually positive. So, cost basis of 56.70 at 2 shares, down pretty well by 0.5% overall for the position. Nothing too crazy. Activision, one I want to buy more of, but I was kind of hoping it dropped more, but it didn't, so I didn't really get to put more money in. Following them, I'm TD Ameritrade. Did not add to this position. 4 shares at 33.07, so I'm up 3% on this position. Not one I'm looking to add to either yet, but I like it. I do like the prospects of the stock. I just don't think I'm buying it quite yet. Next we have Realty Income. You may notice if I scroll down here, that's right, I purchased 1 share at 43.88 for this stock. Only 1 share, wanted to buy 2 to round it up to 20 shares. So I've got 19 shares at 54.66, up 6.5% on this position, 8.75% of my portfolio. It's a position I really like long term, and I think it's still in close to buy category for me too. If it's below my cost basis, I'd love to add plenty more if I could just make myself bring the capital in. So I've been waiting to bring capital in. Don't worry, I promise you. Next we have Iron Mountain. No change here. 34.06 of the cost basis at 25 shares. Down 28% overall in this position. You don't like to see it. You want to see positives on that, even through these. After that, we've got, that's right, the goodies. We have OHI. One that, let's just say, if you look at the 3-month period here, this thing shot down hard, down, under $14 at one point. But it's right back up around the my cost basis. So at 28.03 is my cost basis, 20 shares. Total return of 2.6% down. Nothing too crazy. It was positive as of yesterday, but today, obviously, we've gone down just a little bit. What else would we like to bring up? After that is ABR. ABR is one that maybe you can just take a little peek. That's right. On March 16th, I picked up 5 shares at 7.84, and I picked up, that's right, more shares on the 19th, 5 more shares at 3.95. I wanted to pick up a lot more of this company because I really like what this company's doing. I think they're going to do a great job, and they'll definitely get on the other side. 7.93 is my cost basis, 65 shares, down 16% on the position total, 16.5. So not ideal for the position, but it's one that's been absolutely hammered and now recovered pretty rapidly. It's been a crazy trading stock, and you see that same thing with Apple Hospitality. Really, all of my real estate investment trusts, the REITs, have traded just insane lately. For Apple, 55 shares at 15.25, total return of 40% down. You don't like to see that, but you see on March 19th, I did pick up 5 more shares at 4.54, so I hope you like to see that. After APLE Apple, we have ARI, one of the most interesting stocks for me, one I really like and I want to purchase some more of, even more. So I went ahead and picked up 5 shares at 6.47 on the 19th as well. That's right, put a lot of money in on the 19th, don't judge me. Cost basis on this guy, 15.05, 20 shares, down 38.5% overall. So not the most invigorating type deal. for that one. But I still like the valuation. It's definitely on my buy list. If I get some more ABR is, OHI, IRM. We've got one I already clicked on, which you hate to see. You hate to freaking see it. Following this will be NRZ. Somewhat newer position, but guess what? If you look down here, I added a lot of stuff going on here. January 13th, added 7 shares at 16.43. Then added another 3 shares at 16.70. Then on March 19th, I bought 5 shares at $5.11. So really cheap shares for this company. One I'm a huge fan of, for sure. But again, dividend likely going to be cut for this company. I'd like to see what happens as far as where that lands at. So for following that, we've got P-Spec Prospect Capital, 25 shares at 641. Did not buy anything additional with this guy. Down 25.3%. Crazy stuff. So after you see PSEC there, we got a couple ETFs. Not really worth mentioning the ETFs because they're not necessarily on my buy list, I would say. I'd like to look at normal stocks. We've got InBev, biggest failure of my life. Cost basis of $4.74 at 70 shares. That's right. Total revenue or total return is down 71.4%. You hate to see that. It's not one you like to see. Did not add to that. Not necessarily planning on adding to it either. GoldMed Pharmaceuticals. Cost basis is, that's right, $9.40 on this one. 15 shares, down by 64%. One I could see myself buying a little bit more of, but for the time being, I say not really. I'm not quite in. Finally, we, not finally really, but we have NEO here, as everyone likes to talk about. Considering buying NEO here, cost basis for me is 100 shares at 207. So that's the total return down here is 34.39% for that. NEO here. So we like taking those wins. Those wins in terms of gains. Those are what we call dubs in this house. After NEO, we've got Plug. No changes to Plug. 221 is my cost basis. 30 shares, up 65% on Plug Power. You love seeing that as well. So keep going here. We see Blink Charging. Cost basis is 232, down 26% on the guy. I wish I could have more. Just really need, a little bit more offering for this company. They've kind of been stagnant recently, but no real news regarding them. But I'm sticking with my shares for now. Nothing too crazy. And finally, we wrap it up with everyone's favorite. Not really. CPRX, Catalyst Pharmaceuticals. I'm down 28.38%. 10 shares at 5.28. So overall, that is my portfolio. Down 3.16% today. All time down, around 5%. You can think about what you want, but I hope you enjoy this and you're sure having a lovely time with whatever you choose to do. So let's hope to get this portfolio back up to the range it was before, but I'm guessing probably another year out. So let's hope for the best, though. Thanks.